The number on your screen is $4,120. That's everything you have left. After rent, taxes, and food that keeps getting more expensive every month. You moved it into a high-yield savings account this morning, 4.25%. It sounded smart, responsible. The interface is clean, soft blue colors. Everything feels controlled. You think your money is sitting somewhere waiting for you, resting, growing. It isn't. The moment you hit confirm, it stopped being yours. Legally, technically, structurally, it changed form. On the bank's balance sheet, it became a liability, a number to be used, a resource to be deployed. By 11 a.m., it's already been multiplied, not stored, not protected. Your $4,120 becomes $40,000 in new credit. While you're deciding if you can afford a vacation this summer, your money is already working, just not for you. It's funding someone else's purchase, someone else's risk. 18% on credit cards, 7% on mortgages, same liquidity, different outcome. This isn't theft. It's asymmetry built into the system from the start. You gave time, labor, and certainty. They turned it into leverage and scale. Every morning, the system wakes up on deposits like yours, quietly, automatically. You are not a client. You are input. 3 years later, you're 28. You've leveled up. A 3-bedroom house, $450,000 mortgage, 30 years, fixed rate. You hold the keys in your hand. You feel it. Progress, stability. You think you own something now. You don't. You've been converted. In this system, you are no longer a person. You are a score, a ratio, a payment stream. Within 48 hours, your mortgage is sold, bundled with hundreds of others. Your signature becomes a slice of a financial product, a mortgage-backed security, traded in markets you will never see, priced by people you'll never meet. Your life becomes a line item inside a larger structure. You stay later at work. You take fewer risks. You stop thinking about leaving, not because you want to stay, because you have to. The payment is due on the 1st, every month, no exceptions. Look at the amortization schedule. The first 10 years, almost all interest. You're not building ownership. You're servicing a structure designed to outlive you. You think you bought a house. What you really bought is a reason not to leave. You're 32. New suit, better office, private banking. The air smells different here. Quieter, filtered, expensive. Your clients are wealthy. Doctors, founders, executives, people who believe they've already won. You sit across from them as a trusted advisor, calm, controlled. Then you start to understand the role. Your job isn't to make them rich. Your job is to keep their capital inside the system. You sell access and exclusivity, metal cards with no preset limit, bespoke portfolios wrapped in polished reports, 1.25% AUM, whether they win or lose. You smile while the spread slowly eats their returns, not violently, quietly, structurally. Because private banking isn't wealth creation, it's wealth containment. You start seeing patterns across accounts. The deposits from level 1 become the liquidity that sustains clients here. The system connects. You used to be one of them. You stop seeing people. You start seeing flows. You leave clients behind. You enter capital markets. This is where the system is built, not advised. Your desk runs on models. Your language becomes risk, tranches, spread. You take thousands of lives from level 2, mortgages, loans, debt, and turn them into products. You slice risk, repackage it, relabel it. $500 million in liabilities becomes a CLO. The structure looks stable, mathematical, rational. But you know what's inside it. You're not thinking about families anymore. You're thinking about structure. If it fails, it doesn't fail here. You've already sold the risk. Pension funds, insurance capital, offshore balance sheets. You get paid before anything breaks. That's the system. It doesn't absorb risk. It distributes it across distance and time. You don't build wealth here. You build instruments that move it. You're 42. You don't run models anymore. You run outcomes. P&L, capital flow, access. CEOs call you, not for advice, for permission. You decide which deals happen, which industries expand, which ones disappear. The room changed. Dinners, boardrooms, private conversations. Everything runs on relationships. They're leverage structures that look like relationships. You see the system clearly now. The deposits at the bottom fund the dominance at the top. You structure a $10 billion facility. It funds a company that replaces thousands of small businesses, the same small businesses that banked with you. There's no conflict, only flow. At this level, morality becomes friction, and friction gets removed. You leave the bank. Now you don't operate inside the system. You define it. Interest rates, liquidity, policy. One decision, millions of consequences. As rates rise, people spend less. As they fall, assets gain value. You don't see people anymore. You see effects. Inflation becomes visible, not as a problem, as a mechanism. Value moves from savers to asset holders quietly. You don't print money. You direct where it goes. Markets don't feel random anymore. They feel guided. You are not reacting to the system. You are setting its temperature. You're 65 now, without a public role or title, yet present inside everything. Through trusts, holdings, and layered control structures, your influence moves quietly without visibility. You no longer trade or appear publicly. Instead, you allocate influence through others. You begin to see the system clearly, not as money, but coordinated human effort. A structure organizing labor, capital, and decisions across decades, shaping outcomes beyond individuals. Every level below you, from depositor to borrower to client, feeds the same loop. Each role connects seamlessly into the next, forming a continuous and self-reinforcing cycle. You don't truly control the system. You maintain its balance and continuity over time. That realization settles in quietly, without drama, as a final understanding of your role. Late evening, a quiet car moves through the city as lights pass steadily outside. A notification lights up your screen, signaling that a new account has been opened. Across town, a 23-year-old stands at an ATM in the rain holding cash. He looks at the money and smiles, convinced that this moment is his beginning. He has no awareness of what has already been set into motion behind the scenes. His money is already moving through the system, repackaged, leveraged, and deployed elsewhere. He isn't entering the system at all. He is actively feeding its continuous operation. The screen resets again. Another user steps forward. Another deposit continues the same cycle. The system never pauses or slows down because it was never designed to stop. It runs entirely on people who believe they are the ones in control. And tomorrow it will open again, repeating the same process without interruption.